Good morning, Mark Soderberg with ADM Investor Services with your ag outlook for Friday morning, March 21st. Happy Friday to all. Quiet two-sided trade overnight across the ag space with very little fresh news available. Not even a major upset in day one of the men's NCAA basketball tournament. So hopefully, like mine, your bracket isn't completely busted just yet. After being net sellers the past 4 sessions and 5 out of the last 6, traders did turn buyers yesterday in the corn market, scooping up just over 10,000 contracts. We've got that long position now back up to about 125,000 contracts. This afternoon's CFTC report will likely show money managers short everywhere else. However, we've got them short 15,000 in the beans and in the oil, 70,000 contracts in Chicago wheat, and about 80,000 contracts in the meal. Strength yesterday in the corn, likely due to strong export sales. Commitments are now sitting at 25% over a year ago. The USDA forecast is for only a 7% increase. Pace analysis would certainly suggest a higher export figure. However, the brewing trade wars and tariffs certainly cloudy this picture. Speculation that the U.S. may have sold a small amount of corn to Brazil, our largest competitor in the global marketplace, sent May futures up to their highest levels, or new highs for the week. Bean oil sales yesterday also very strong, bringing committed sales for the 24-25 marketing year to just over 1.9 billion pounds, already well over the USDA forecast for the year at 1.8. So I look for additional switching of bean oil used for biofuel production into the exports, that coming in future WASI reports. Late yesterday, the Buenos Aires Grain Exchange, they lowered their Argentine soybean production another 1 million metric tons to 48.6. They are now just below the USDA forecast at 49. They did keep their corn production estimate unchanged at 49 million metric tons compared to the USDA at 50. Corn harvest has reached nearly 14%. A few more days of dry weather across Argentina before regular rains start to kick in, slowing harvest activities really through the rest of the month of March and likely into the early part of April. Striking workers at the Argentine soy processing firm Vicentrin did return to work yesterday after a brief stoppage after agreeing to terms on the payment of back wages. In Brazil, good rains across the central and northern growing areas should keep their second corn production prospects high. Dry across the south, however, as drought conditions expand across Rio Grande do Sul northward into southern parts of Paraná, areas that will need some rain here by early April to prevent some yield-threatening stress for the second corn crop there. Here in the U.S., as expected, we did see a rather sizable spike in drought readings across the southern plains just ahead of the U.S. winter wheat crop breaking for dormancy. While drought readings did ease, however, for both corn and soybean areas. Over the next 7 days, rains will once again favor the southern and eastern corn belt, as well as southern Texas, with very little to no precipitation for the Oklahoma and Texas panhandles and much of the western plains states. Inside trade for corn overnight, we are backing up here a little bit now, trading about 1 to 1.5 lower. May corn will try to hold above its 100-day moving average. I've got an upside target of 480 here leading up to the USDA reports at the end of the month. Beans still grinding sideways in a 10-25 range for the May contract. Major resistance above the market at 10.27.5, the 100-day moving average. Inside trade for meal and oil overnight. Spot meal just consolidating below that $300 level. And wheat prices trying to rebound a little bit from the recent pullback. So far, the limited ceasefire agreement has done little to stop the fighting in the Russian-Ukraine war. Thanks for listening, everyone. I hope you have a great day and a great weekend.